Hi, everybody. It's Jeff Fitzpatrick with my weekly podcast being recorded on Monday, the 11th of March, 2024. This well may move to midweek in future simply because it's better for trading. We're getting beyond the opening price of the market. But here goes for this week. The agenda doesn't change. You'll be getting used to what we cover now. Let's get into it. So let's see what economic news is due out this week. On the 12th of March, that's tomorrow, we've got the Consumer Price Index, the CPI, coming out. It's forecast to remain about level. We've also got retail sales coming out, and the figures are expected to increase. And we've got the manufacturing index, and again, that's expected to be positive. So although we're in a period of coming up to Expiration Friday, these could stop the market falling or at least reduce the amount by which it does fall. Let's see what happens. Some company news. Apple saw a reduction in its share price this week of almost 70 billion. That follows a 2 billion fine for using music streaming with irregular practice. Foot Locker, they reported a whole day quarter loss, provided weak guidance for the current year despite higher sales, and the company swung into a loss of 389 million. So not too good for Foot Locker. The Gap retail store, they've got whole day earnings which exceeded expectations, and the retailer saw a 6% increase in its brand of Old Navy sales. Its gross margin improved and its share price increased by 5%. More news on Macy's. Last week we said they're closing 150 stores. That's 20% of their estate. But this week they're in talks about being taken over, and that's actually pushed their share price up. It's a funny old world in stocks. There are 12 new value line reports out this week to look at. These are for companies that we generally have within our portfolios. So there will be more than this coming out overall, but these are the most important ones to us. And the indices, really interesting this week. So the TICN collective stocks, the 162 stocks that have ever been a 4x4, collectively increased by 5% on average over the last week, whereas the S&P 500, the Nasdaq, and the Dow all fell slightly. Now, we do know that when the market falls, TICN stocks tend to fall to a lower level, and they generally recover more quickly and to a higher level. But what we might be seeing now is the TICN stocks also lag and fall not as far, but perhaps a bit later than other stocks. So this is being worthwhile now tracking. We've only got a few weeks of data, but I'm looking forward to doing it in the long term and seeing how things move. I am very sad. And I've only really got one stock that's capturing my interest this week. That would be as a new entry, and it's Nike. It's got a value line timeliness score of 2. The quality and value at 46 and 43 respectively look okay. And on my new system, it's also got itself a good timing score of 42, giving a grand total of 131. Now, a couple of downsides on it. The price is pretty high, $99.16. Above $100, I begin to get nervous. I'm looking a little bit at this as it might be expensive to get into. Also, its earnings, while they're not imminent, it's not far away. They're due to announce their earnings on the 21st of March. You can see I've also put together a little chart, and the red line, so the lower of the two really on this chart, is an index, a quarterly index since the 31st of March 2020 of Nike's price, compared to the blue line, which is the S&P 500 index. Now, the S&P 500 went up very sharply over the last quarter, mainly as a result of NVIDIA and the Magnificent Seven. However, we're not really quite seeing these two closing. although it could come yet. So there certainly is scope. It's got far enough away from the S&P that it should be thinking about turning around. So I've also looked at the options, and these are available for April, June, July, September, October, December, and also January 2024. The downside is that the stock has $5 strike price intervals. However, based on July, which is 130 days from now, and a strike price of 105, without negotiation, a bid of $9.80 is being offered. And a stock buying power usage is quite a lot at 4,980. However, that gives a return on capital employed of 19.38%. And if you annualize it, it's 54.4%. It offers a 9.19 discount on the price. So if they were put to an account and the price was then $105, would have paid 9.19% less for them. So worth considering, but if you're more cautious, you might want to wait for a better opportunity. Earnings coming out over the next couple of weeks, we've got Oracle, ADM, Fossil, JBL, BKE, CTRN, Ollie, DRI, FTS, La-Z-Boy, Nike, and WGO. So there's that Nike. But also the rest of these, just be careful what you're doing in terms of trading with them. The earnings coming out can make a big difference. What we don't try and do is forecast what the earnings are going to be or how the market is going to react to them. We wait and see what actually happens and then respond to it. We've just completed the training. We had a great weekend at the Sofitel Terminal 5 Heathrow this last weekend, and we're going to be doing that again in June. So Friday to Sunday, 21st to the 23rd of June, we'll be at the Sofitel. The Friday night, all day Saturday and all day Sunday, and members and guests are welcome to attend all of them or one of them or two of them, whatever you want to do. There'll be separate pricing for the Friday, Saturday, and Sunday, and a discount for those that attend all three. Just a quick plug for the book. I've been getting some really good feedback on it at the weekend's training. People really seem to be enjoying it and finding it useful. If you haven't read it yet, I think it's a good idea. Or, of course, listen to it on Audible. It's also available on 50 other publishing sites. That's it for next week, and get back to work, back into my research, and I'll talk to you soon.